After 6+ years of learning how to trade, I've had many wins and many losses, and I've tried hundreds and hundreds of strategies. And after years of finally perfecting my own system and making over 6 figures using it, this is everything you need to know in a single video. The best part about this is that I'm not going to teach you 100 different concepts. It's just going to be 1 to 2 simple concepts, and the rest dumbs down to execution. Before I get into this video, make sure you guys join the Discord server in the private community in the bio. I live trade in there every single day, and I have all my strategies posted in the Discord. And make sure you guys watch this video all the way through. Do not skip anything. Trading is very precise and meticulous, and you need to watch every single minute to be able to understand what I'm teaching. In this video, I'm going to teach you the best day trading strategy you could possibly use on a day-to-day basis to make consistent returns. I'm also going to give you guys a couple real live trade examples that I've taken using these strategies and the results me and my members were able to make by using them. Make sure you guys like, subscribe, and hit the notification bell, and let's jump right into the video. In my experience, this strategy works best during an accumulation phase of a stock. So what is an accumulation phase? Whenever a stock is making a move, it is not going to make a move in a simple, clean upwards direction. Accumulation happens when a stock makes a huge move. The stock needs to consolidate at a certain range or price before it makes a move to the upside or downside. Now, in this structure that I drew out, the accumulation phase is after we have our move up, we're going to have some sideways action, and this sideways action is exactly what we're looking for. This is the accumulation phase. This right here is the accumulation phase right before we break out of it and continue upwards, or even sometimes continue downwards. In this example, the second accumulation phase, although it's not as long as the first one, is going to be this section right here. This is after a big move to the upside once again. The stock is going to accumulate or move sideways for a little bit before we continue to move up or down. Now, why is this accumulation important? As day traders, when we're looking at a chart, we want the chart to be as predictable as possible in order to take high probability trades. We don't want to take any trades that we're super uncertain about. We want to have the proper risk to reward and the proper risk when entering a trade. And when a stock is moving sideways, it's usually moving within a range or price that you're going to be able to predict. So usually the top of the range is where buy side liquidity rests at, and the bottom of the range is where sell side liquidity usually rests at. What this typically means is when a price hits buy side or the area at the top, buyers are going to liquidate and price is going to reject. Now, when a stock hits the sell side liquidity down here, this is where the sellers get liquidated, hence pushing the price up because the buyers get to step in. Now, I've mentioned this exact concept in multiple videos. It is always good to incorporate this into different strategies, but in this example, we're just going to use it in the most simplest form, and you're going to be able to execute trades very easy just based off these liquidity zones. So I'm going to give you guys a quick rundown on this drawn structure that I have, and then we're going to go from this example to a live chart. So first, what I'm going to do is I'm going to identify our buy side liquidity. Next, we're going to identify sell side liquidity. Buy side is always going to be the liquidity resting at the top. Sell side is always going to be the liquidity resting at the bottom here. So once we have buy side and we have sell side liquidity, now we're going to identify our middle resting liquidity. Middle resting liquidity is going to be drawn using these key pivot points that we have over here that you're going to see on the regular chart as well. So using these as support and resistance, we're basically identifying a zone in the middle that's acting as a middle or secondary liquidity level. I know I went pretty fast on identifying our buy side, sell side, and our resting liquidity, but I'm going to show you guys how to identify that properly in the next example. In this example, I'm going to give you guys a quick rundown of how to execute the strategy before I teach you guys how to draw it. For the strategy, you're going to have 3 zones. You're going to have the top zone, middle zone, and bottom zone. Buy side liquidity, resting liquidity, sell side liquidity. I'm going to show you guys in the next example how to draw these, but just bear with me and follow along. So when price is trading up here at buy side liquidity, and it breaks below the middle zone, now we know that price is going to act as a magnet to this bottom zone before it ever touches top zone. When price breaks above the middle liquidity here, we know price is going to act as a magnet to the top zone before it ever considers touching the bottom zone. So jumping into a real chart, I'm gonna show you guys how to exactly draw the zones and how to implement this strategy in a trade. Coming into our chart here, first and foremost, you're going to want to identify an accumulation phase where a stock is moving sideways or is beginning to move sideways. And in order to do this, you're going to want to typically hop on the 1 hour chart to get a clear picture. So remember guys, we're looking for a range where price is moving sideways after a leg up or down. We can easily identify one right here. We can identify a small one over here, small one right there. As we go up, we can identify one right here. Now I'm gonna show you guys a great example as a recent price action, and it's gonna be resting right here. So once we identify where the accumulation range rests at, and looking at it on a 5-minute chart here, we can literally identify a buy side and sell side liquidity simply by using half of the range we're in. When you're looking at the range, you want to mark the highs, it's going to be resting here, and you're going to want to mark the lows. So once you have the highs and lows, you have somewhat of a clear range to work with. This is where you're going to go in and you are going to draw in your zones. You want the highs to be the top of your buy side liquidity zone. So that's going to be the top of my zone. And to find the bottom, we need to make sure it has multiple touch points. What I mean by this is multiple points need to be respecting the zone. Now, if we just drag it up and make it like this, you can see we're not actually tapping these and respecting it, and the zone is very, very small. So we're going to want to drag this zone down far enough to where it's not too big, but it is respecting a lot of these small rejections. This is going to be called our buy side liquidity. Now on the other hand, we're going to use the bottom to identify our sell side liquidity. So we're going to use the bottom of the range as a bottom of our sell side liquidity zone. And then once again, you're going to want to incorporate a decent amount of touch points going across, but you're not going to want to do too much. You want to keep it very simple. See, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 9-ish touch points just off the sell side liquidity. And we're going to call that sell side. Now, a lot of traders will simply just draw this in and they will start taking trades simply by just identifying buy side and sell side liquidity. Now, that is not a bad idea. However, we're going to take this a step further. And with this extra step, we're going to significantly increase our win rate. And I'm going to show you guys an example of how this extra step helped turn a losing trade into a profitable trade. So this extra step, you're going to want to identify a possible liquidity in the middle if it applies. Now, how do you identify this liquidity zone? You're going to look for common areas of support and resistance within the middle of liquidity. So we're going to take our crosshair, and how we do this is we're going to just keep dragging this crosshair down until we see a lot of support or rejection off this line. Now, just by putting this line here in the middle, you can see we actually have 1, 2, almost 3, 4, 5, 6, 7, a good amount of support and rejection going on here. So what I'm going to do is I'm going to go ahead and just draw the line here. And now you have the line in, you're going to want to create your zone. So once again, you never want this zone to be too big or too small. You want it to be manageable and usable. Dragging this zone out. How we use the zone in the middle is very simple. When price is trading below this liquidity zone here, price is almost always going to tap sell side liquidity before it touches buy side liquidity so we can short. When price ends up trading or breaking above the middle liquidity, price is more than likely going to tap buy side liquidity before touching sell side liquidity so we can play calls. Once again, I'm going to use the same exact logic here. When price comes down and breaks below the middle liquidity zone, now we know that price is going to, instead of tapping buy side, it's going to tap sell side first. When price breaks above middle liquidity, we know it's going to touch buy side before sell side. Now, right as price broke this liquidity zone, guys, I actually ended up taking SPY puts, and then the market closed. Overnight, the market went all the way up to $607, an almost $4 move up. And my position ended up opening negative 60%, I believe, but I did not stop out of that trade, and I'll tell you guys why. I knew that price was going to act as a magnet to sell side before it was ever going to touch buy side liquidity, because we broke liquidity right here. So despite opening up here, I knew price was going to sell off the sell side, so I ended up holding my position, and we sold that position for a nice hefty profit in the middle of the next day. I know I'm saying liquidity a lot, but this strategy is fairly simple, guys. All you have to do is identify your buy side, sell side, see if there's any resting liquidity in the middle, identify that zone, and then once you break above it, you know that price is going to act as a magnet to buy side. Once you break below it, price is going to act as a magnet to sell side. Now I'm going to go in and I'm going to identify all the trade opportunities that we could have taken, or that we actually did take in the Discord server throughout these few days of trading. So these are the day trades, swing trades, or scalps you could have taken within these few couple days with a 100% win rate simply by using liquidity zones. In 2024, I was able to turn $500 all the way up to 100K, and I was able to turn $500 into 5K 10 times, all done live in front of you guys in the Discord server, where I go live and trade every single day. If you guys want to come day trade with me, I post all my trades in there. And in 2025, I'm going to be doing something completely different, and I'm going to be taking these challenges a step further. In 2025, I'm hosting my first ever 500 to 50K day trading challenge, where I'm going to reset my personal portfolio to $500, and I'm going to be trading that all the way up to 50K. Every single trade that I take posted live in front of you guys for you guys to follow. If you guys want to join the challenge and follow along, join my private Discord community in the bio, and I'll see you guys in there. And an invite link to that Discord server is going to be in the description. It's free to join for a limited time, and I'll see you guys in the next video. Take care.